Paul Ciana. He's a technical strategist at Bank of America. Paul, you see oil actually hitting the 3 handle again, which people have just started to say in the last day or so. But you also say it could be a good sign for bonds. So explain that to me.
Absolutely. So this morning we put out a report called Bonds Smile as Oil Cries. And essentially what we've seen over the last few years is when oil prices break down, it tends to fuel a rally in the bond market, and vice versa. If oil prices rally, bond prices can come in a little bit. And that relationship is very prominent over the last few years, and it's happening again right now where it's starting to be on an even larger scale. So the smile that we're seeing in bonds is that double bottom that's formed this year. Bond prices have risen to exceed the peak of that double bottom and confirm that U.S. 10-year yields will likely fall to 1.97%, likely this summer, if not a little sooner even. And oil prices have just accelerated down through multiple support levels. Last week it was 45.25. This week it was 44.09. It just keeps going down, breaking supports and failing at lower resistance levels. It's the absolute definition of a downtrend. So we see bond prices continuing to rise, the yield markets correcting back under 2%, and I think the WTI crude oil will just be one of those catalysts as it trades under 40, likely down to about $38 a barrel.
Okay, so I understand this is a historical pattern that you've seen, but I just want to break down the logic a little bit here, and bear with me. Is this basically saying with crude coming off, the risk-off trade is coming off the table, people are sort of making a flight to safety, that's why bonds go up? And would this take stocks with it too when we see crude approaching 40?
I think you can definitely look at this measure in this chart that you have there as a risk-on, risk-off metric, right? If bond prices are going to continue to trend higher as crude prices come down, yes, that is a feeling of risk-off. Now, that could certainly be a poor sign for the energy sector. It could be a rotation out of energy again, back into maybe tech. Last week, our equity technical strategist pointed out that that's what was happening when that tech move happened, right? Energy and banks picked up. However, if oil prices continue to drop, that money that just flew out of tech and into energy may very well go back into tech for all we know.
So could, we've been watching this market just go up, 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 waiting for some sort of catalyst here. Could the energy market, could oil be it to take us down?
I think it's one of those things that we definitely have to watch. It's really going to depend on how much more the decline accelerates. We get under 40, 39, 38. I think every dollar lower, the beta or the risk of a larger event just increases in investors' minds about how much worse can this get. And that's where I think it could accelerate and possibly could be it. Yeah.